Sebastian, I don't know if we can call you a startup anymore at $45 billion, but wow. I mean, last time you joined us, you said that you want to disrupt the financial services industry just like Tesla has disrupted the car market. What's changed between the last time we talked and now?
Well, I think that is so true still, right? I mean, people don't realize it, but the credit card industry itself, it's been reported that it actually costs low-cost income households in the US $70, and it transfers $700 into high-income households. It's one of the most effective redistributions of wealth that exists. And fortunately, more recently, consumers have started realizing this. Debit has grown 5 times over credit in the last 10 years. And the pandemic has, further accelerated this. We've seen over $150 billion worth of credit card debt paid down, which is fantastic. People should be using debit cards instead of credit cards. But the problem is that occasionally they do need credit when they shop online or in specific situations. And that's where buy now, pay later like Klarna services come in and solve for those situations. So we're very, very happy about that. And we think this is a very positive change.
Your competitors, like Affirm, are public companies. At a $45 billion valuation, isn't it time to go public?
Yeah, I don't know. I think that, it's obviously we're very, very proud and happy about this, and I'm very impressed by all of our colleagues who have contributed to this. We're seeing massive momentum right now in the US. It's quite amazing. We're 18 million users now, growing over 1 million a month. We're now live in 80,000 physical stores, which is super exciting as well, with Macy's, Sephora, Foot Locker, among others. But I think, again, I really think about this in a long-term perspective. I mean, we have another company there in the Valley founded by one of those electric guys that you were showcasing earlier. And, they're 10 times larger. And beyond that, there's a whole credit card industry to go after. So we sincerely believe that this is just the beginning of it. And maybe along the way, it will make sense to IPO at some point in time, but it's nothing that is immediate to us right now. We're very focused now on the US and the growth there right now.
Okay, one more on that topic, though. Does the funding at all postpone an exit? Because I assume at this valuation, there is pressure for an exit and that the pressure is going up.
Well, I actually don't think that's the case. I am extremely proud. I've been working with Sequoia for 12 years, and I didn't realize when I got them as an investor how extremely long-term they can be, but they are amazing. They are genuinely long-term. Michael Moritz has been on my board for over 10 years. They've been supporting us. And over the years, when I've seen what Sequoia has done for us, what I've started doing is trying to find other very long-term shareholders like Bestseller that we have on board today and others. So try to make sure that our cap table is long-term. And that's still the case. And over the years, that's actually how it's developed. So I don't actually feel that pressure. I feel massive support to go after the long-term vision of what we're trying to accomplish and make a big dent in this retail banking space. Because it has not thought about consumers. It has been mostly thinking about pocketing money in their own pockets. So there's a massive opportunity to actually be part of shrinking this industry, which is what we're really about. We want to shrink this industry, makes it smaller, but hopefully our shareholders will benefit by us having a slightly larger part of a smaller pie.
Okay. Now, last time we spoke, your position on crypto was clear. You said you were worried. You're worried about the risk. You're worried about people losing money. Now that we've seen all this volatility, has that changed your position at all? If Bitcoin is lower, does that make it a better bet? Where's your head right now?
Yeah, no, I always want to be mindful when I speak about it, because if you say something positive about Bitcoin, then the second, there's 2 million tweets about it and it's promoted as another verification of it. And I think maybe this technology will prove to be something interesting and disruptive. And I sincerely hope that's the case. It would be obviously fun, since I do think that there's some interesting promises of it. But at the same point of time, I'm just worried that if I would like to take Klarna stock and advertise it like Bitcoin is being advertised, at least with all the jurisdictions I'm familiar with, I would probably be fined or even put in jail. You're not allowed to advertise financial instruments, especially such with high risk, without proper disclaimers. And I think that's for a good reason. And I'm a little bit worried when I see people advertising Bitcoin. So an ad this other day that in the metro in London or in the subway in London saying Bitcoin is even here now, just go and buy it. No disclaimers, nothing. It just makes me worried.
All right. You're launching in new markets. What will you do with this new infusion of cash? What's next on the road to this great ambition to disrupt finance like Tesla has done to the car industry?
Well, I think that we launched France this week, we're very proud of, so that's great. That means that we now cover over 20 countries, which is quite cool, and we want to continue that. I think that the traditional retail banking has been kind of more local, but very broad in services. The future is more specialized. We want to be about people's everyday purchases. And so obviously country expansion is going to continuously be important, but also what we found is a lot of amazing fintech startups out there who have these amazing products of how they want to simplify people's lives, save them time, save them money, make them less worried about their finances, but they're lacking distribution. That's a lot of the parts of banking has been able to sustain these barriers of entry because it's a scale game and because cost of customer acquisition has been extremely high. So make it very, very difficult for new services to come in and compete. And we think that, part of this could be obviously us merging with such companies and partnering up with them to help them distribute fantastic products to consumers to further, reduce their cost for financial services. I mean, it was in The Economist that every human being on the planet pays $350 a year to cost of financial services. That just doesn't make sense. We have to take that down. That money can stay with consumers and society.